Ciao. Thank you.
All right, guys. So we are live. For all those, just make sure that you're muted so you can hear everything that I'm trying to say and explain in this training module video that we're doing. And also save all your questions towards the end. I will answer every single one of them. We're gonna go over, looking at the market, what you want to look for, why you want to get into it,
I'm going
when
in the room,
to
honey.
enter,
Please.
when to exit. Hey, Brandon. Uh, just mute this guy here. Perfect. Okay, everybody's muted. Or he left. So I'm about to share my screen. I just want to make sure everybody sees my screen. Do you guys see my screen? I just need a yes. One yes.
No,
No?
no. Now I can.
Now you can? All right, excellent. Cool. All right, so I'm gonna start from the beginning. This is a good place to start. Let's look at this Great Britain pound JPY trade. It's going back down a little bit. I actually posted this in all the groups this morning. I said that if Great Britain JPY passes this price point, because it's basically formed a double bottom, basically right here, didn't really touch this bottom. Possibly it could. It probably spike down and shoot back up. But once it passes this price point, that's why I put this arrow. Look for it to go to the upside to like 132, all the way back up to 133, 135, making its way to 136, possibly 137. That's over a long period of time, of course. That's not going to happen right away. But it's a solid trade. And I'm going to show you guys how to get into trades like that, how you can profit on the market. All right. First things first, before, like I said, I race and get really into it, guys, I want you to understand something. And I want you to know that in order to become a successful trader, you're going to need a few things to accomplish. And what that is you're going to need understanding, time, and patience. First off, understanding. What I mean by that, you understand the market. You understand what is transpiring, what is going on, what is happening in the market. All right? There's no way you can become a profitable trader. There's no way you can become a profitable anything, not just in trading, in life, if you don't understand what you're doing. So a lot of people, where they go wrong and why they're not successful and why they can't understand how come they're not winning like everybody else, it's because they don't understand why they don't understand the market in general. All right, this is the foreign exchange market. Okay, that's first and foremost. A lot of you guys should already know that. Okay, we are trading currencies, world currencies. Like right now, I have the USD Canadian currency up right now. Okay. Now these markets move based on what's going on in these respective currencies countries. So like right now, last week, or I should say 2 weeks ago, what did we have? We had the big BRICS. What's that? That was the basically Great Britain deciding whether or not they're going to stay in the European Union. A lot of people thought they were going to stay in, and then come to find out they didn't. And what happened? What transpired? Boom. We had that humongous drop. If you look here, this is one of the Great Britain pairs. This is GU. What did it do? It dropped. It dropped tremendously. Boom. All Great Britain pairs did it. This is GJ. Same thing. If you look at here, this big drop. So all Great Britain pairs dropped, and as many of you have known, a lot of you guys receive emails, texts, whatever, from your respective brokers advising you that, hey, you know what, there's this thing going on right now, in the market, and we know it's going to shake, and it's basically going to make the market very volatile. So if you don't use proper risks and you don't understand the market, please stay out, or most importantly, stay away from these gray brain pairs because they're going to be very unpredictable for the next several months. Okay, so understanding what's going on is vital, very, very vital into you becoming a successful Forex trader. Okay, trust me, I know. You have to understand. If you don't understand why you're putting a buy or a sell in the market, you shouldn't be entering it. If you're entering it because such and such said to buy or such and such said to sell, that's not a good reason. You need understanding. You need foundation. Like, what's 1 + 1? 2. Why is 1 + 1 2? You can clearly explain that to me because you have understanding of basic math. You understand the principles. You understand that math is universal. Everywhere you go, 1 + 1 is 2. So it's the same thing, same kind of foundation in here. You have to understand what's going in the market before you enter. If you don't have a general understanding of what's going on, there's no way you're going to become a profitable trader. That's just point blank period. It's not going to happen. All right. Number 2, I talked about systems. And what I mean by system is having rules in place in the market, okay? We as retail traders, we don't own this. We don't own the markets, all right? We don't own the stock market. We don't own the Forex market. We don't own this. This is not ours. This is run by hedge funds, big banks. They control the market. They decide how much it's going to move on a daily basis. We as the retailers, I mean, we decide as well, but it's overall these institutions, they're the ones who really move the market. All right? So us as retail traders, look at it this way. We are basically customers at a casino. The market is the casino. We are the customers. All right? And as you know, 9 out of 10, the house always wins. Why? Because people get greedy. They let their greed get the best of them. I know for a fact a lot of you guys have been in trades where you've been in profit, and you could have taken profit, but you didn't because you thought you were gonna make more money. It's like being at the crab table. You're up, you're winning, you're winning, you're winning. You're supposed to walk away. That's how you beat the house. Take your money and run. But what do most people do? They do the opposite. They keep going because they think they figured it out. They can beat the market. They got it beat. And then what happens? Boom. They lose everything. That's why the house always wins, because they know psychologically you're going to keep going. Because why? One of my mentors say, money being the root of all evil, people let their greed get the best of them. All right? There's really, if you really think about it, there's really no such thing as a good or bad trade. All right? Only lessons. So if you have a system in place, you have rules in place, and you follow them, you'll become a profitable trader. Okay? Right here, guys, you see this. I'm doing this specifically for you, for your team. This is not being dropped in any other group chat or anything like that. This is a live account. I don't normally do this. I'm not here. I don't showboat or anything like that. This is an account built literally from $1,000. I'm all the way up to like over 10 grand. Why? Because I had a system in place. I understood the market, and most importantly, I was patient and I followed my rules. If a lot of you guys who've been following me, what do I always preach? Build your account up via pips and percentage. There's a reason why when you go to the bank, they'll tell you, all right, the most you'll get on your CD or this mutual fund is 1% after 3 months, 6 months. Or when you receive your update on your 401k, it grew by 0.5% for the year. There's a reason why they use percentage, because they can't guarantee. They will never, ever. You'll never walk in no type of financial institution and they'll tell you, your account we're guaranteeing you 100 grand in the next 90 days. we're guaranteeing you, $1 million. And no, you can't, because you can't predict the market. We don't know what it's gonna do. That's why, if you notice, even when you go get a loan at a bank, they give you interest rate. Everything is by percentage. So that's how you want to think like the banks, like these institutions. You got to change your mindset. Change it from average thinking, change it from a retail banker, and think like the institution. So if they're building their accounts up by pips, you need to do the same thing. Once you learn how to build your account up by pips and percentage and not dollar amount, then you will see growth in your account. Then you will see profits. That's how you stay in the game. That's how you beat the house. All right? So we're going to start from the beginning. I'm going to erase everything. I'm going to go over a few markups, show you guys some tricks, some very neat tricks that you can apply in your trading strategy. I mean, right now, you can literally wait for these setups, trade it, and then boom, be done. That's it. You know the market is going to make its move, and then you can cash out at any given time. All right? All it comes down to, like I said, is being disciplined, understanding the market, and patience, having a system. All right? Cash out. There we go. All right? All it comes down to is just understanding the market. So we're going to start with GJ, for example. All right? Because this is the trade that I called for today. So I got GJ. Actually made some profits earlier during London, because I saw that after this dramatic drop here, it finally reached a support, and as you can see, it's pretty much waking up. So by the time this day ends, this is going to be a nice reversal hammer. So anybody who's been studying candlesticks, once you see reversal hammers like this, there's a great, like 90, almost 99.9% chance that this is going to reverse and go to the upside. I'll give you an example. There's one right here. Came down just a little bit, but boom, what did it do? Shoot up. Oh, that's a nice first hammer. Where's another strong one? One right here. Verse came down. What did it do? Shoot up. Trying to find you guys good example. It's not the greatest, but even if you came here, even if you took a buy, came up around here, reversal, this went from, let's see, 183. I'm going far back, 184. That's well over 400 pips. That's more than the average trader gets in a week. The average trader is getting about less than 100, less than 50. So you guys get the idea. So that's what I'm looking for. That's what I'm projecting here. If this holds, which it pretty much is, because this day is already pretty much over, I expect a small pullback during probably Asian, if not London session, and then boom, start shooting to the upside. That's why I based my analysis, and I said here, because we got a nice double bottom, I expect up here and finish that second leg. So what's the first thing that I do? I look at the time frames. All right, guys. Now, if you notice, you got 9 time frames here. All right, you got 1 minute all the way to the monthly. Now, each time frame has its own story. All right, like a book, like any book. It's telling you a story. It's telling you what's going on. It's telling you what's potentially about to happen. That's what time frames are. That's what the essence of time is. Think about it. Look back at a time where you got your first job, you went to college or anything like that. There's a story behind it. So when reading the markets, it's the same thing. It has its own story, and by understanding the story, by reading the story, depending on your level of understanding, will benefit you greatly. You can basically determine where the market is going to move. So you have 9 time frames here, like I said, from the 1 minute to the monthly. And each time frame is telling its own story. Now, each candlestick basically represents that time frame. All right? Again, each candlestick represents that time frame. So I'm on the monthly right now. So as I'm looking, I look back at the previous month, downtrend candle. It was a bearish candle. I'm looking at the current month. So far, 7 days in, it's dropping candle. If I place a trade for a sell, if my analysis is based off this monthly candlestick, monthly time frame, I have to leave it in for about a month or two. One of my rules is when trading, whatever time frame, you have to give it at least 3 candlesticks before you can really make your decision. So like right here, this is a small double bottom. So how do I know it's a double bottom? By the time I get in my entry here, I gotta wait to at least 3 before I can really see some profits. So I get in around here, 1, 2, 3, wait it up, and it's now I'm getting the real story. So if you got in here for a sell, this is a monthly candlestick. So you got 8 other time frames. You know, this is shooting up, shooting down, and so on and so forth. You're gonna be sitting in there for a while. Not only that, you got to make sure you have the account size to handle the swings, because on a monthly time frame, that's the strongest. About thousands of pips are being moved in each candlesticks on a monthly basis. All right. So whenever you're trading, whatever time frame you're trading off of, please understand you're gonna need X amount of times, X amount of candlesticks before you really start to see a move. So if your analysis is based off the weekly time frame. So, for example, if you got in here, you're waiting for that sell, you know what I mean? You're going to have to wait about 2-3 weeks before you can really see progress in your account, before you can really diagnose that trade. What I see a lot of people do, they'll take their analysis off the 4-hour. They'll be like, oh, it's going up. But they'll act like it's the 5-minute chart. They'll come back to it 5 minutes later. It's not moving. It's not doing this. It's not doing that. What's going on? What's going on? You got to give it enough time. You can't treat the 5-minute like the 4-hour. Each candlestick on the 4-hour is 4 hours. 4 hours. So a new candlestick is about to form in the next hour. So after that, the next 4-hour candle after that is around 8 o'clock. 8-9 o'clock. Next one after that, we're talking about midnight. After that, we're talking about the beginning of London session. So if you're whatever time frame that you're trading off of, you have to stick to that time frame. Me, for most people who know, I'm a long-term trader. Why am I a long-term trader? Because the longer the trade, the better the outcome. The shorter the trade, depending on what time frame you're trading off of, and the direction the market is going, I mean, it could work. I know some great, 15 5-minute traders, but that's each candlestick is 15 minutes. If you guys ever watch a Wall Street move or anything, you see those guys that are just constantly trading. They're just all day looking at 5-10 screens and da 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 da. I don't like doing that. That's annoying. I'd rather go about my day. Like today, I know I made $1,800 today. Boom. I'm done. I slept all through London. I didn't have to wake up once. I didn't have to check on trades, get on the London session, and so on and so forth. I will be honest with you. And you guys who've been following me, when have I really called trades during the middle of the night? Very rare. Very, very rare. I like to sleep. That's me. So I plan on enjoying my sleep. So I make sure when I enter trades, it's long term, because I know over a period of 24 hours or a day or two, I'm going to be in profit. As opposed to me trading off the 5-minute, 1 minute, like a lot of you guys treat these trades. I just got an account, but I'm down, $100. Boom, boom, boom. You have to give these trades time, enough time to generate the results that you are looking for. All right. So that's the thing with time frames. Me personally, these are my favorite time frames: the daily, 4-hour, but mostly 1 hour. Love the daily, love the 1 hour. Because the higher the time frame, the stronger it is. The stronger your analysis and everything is. All right. So now that we understand basically the times and everything like that, now we have our candlesticks. Now, I'm not really super big in price action. The only thing I like to use when it comes to price action, and price action is basically you're dealing with what's currently happening in the market. You're dealing with the type of candlestick formations and so on and so forth. I like to deal with where exactly the market is trying to head at the end of the day. When you cut out all the BS and all the stuff that's happening, where is the market truly, truly trying to go? So what I do is I look at either the weekly or the daily. I look at the monthly as well, like I said, but that's really long, long term over time. So I look at the weekly. I see here, all right, we've basically GJ, for example, since this was it's been on a steep slope. It's just been dropping. Look at last week, bearish. Previous week, which was BREX, really bearish. Prior to that, the bull candle like this right here are strong, where it's really showing the buyers are like really trying to reverse the market. As you see here, it kind of took control, came up here, but then after the vote, and then the market just crashed, just came crumbling down. So I look at the weekly, I look at the daily, I see where the market is truly trying to go, and I say to myself, all right, well, we're in a basically bearish trend. So that's the trend based off the higher time frames. So one thing I like to do is I like to put my market basically in a range. So this is my highest point on the daily, just using simple tools. My lowest point on the daily. Boom, right there. Now, I just basically put this in a range. My lowest point is 129. My highest point is 163. See how that worked? Clean. I don't have a lot of things, lines and indicators and so many other stuff that a lot of people inbox me and take a look at this and look at that and so on and so forth. Keep it simple. Real simple. I realize in the market is always doing basically, there's always structures. There's always ranges in the market. The market is always ranging. When you're able to find these ranges and point them out, it makes your life a lot easier. What I do is then I basically skip over. I don't really, if I'm going to do the 4 hour, so basically, like I said, I really like using the daily and the 1 hour. If I use the 4 hour, I'm going to skip over and use the 30-minute. I don't recommend, if you're using the 1 hour, trade off the 30-minute or trade off the 15-minute. They're too close to each other. You want to spread the time zones out. So if I'm trading off the daily, I'm making my entries around the 1 hour. Max as low, maybe 15-minute, but I try to not go below the 1 hour because I want strong confirmation. After the 1 hour, then it gets a little sketchy, but I need that strong confirmation. Now, people who use the 30-minute, 15-minute, and 5-minute, they're just trying to get that perfect entry. That's what you should be using the smaller time frames for, not direction, not for your entire analysis of the market, for entry. So for here, for those who wanted to get in at the bottom, so this was my low, I would have probably gone to my 15-minute and then seen here, boom, it touched, retraced up, touched it again, boom, got this strong bullish candle. That was my confirmation for a reversal. Got in my buy here. Now, what did I say? You're going to have to give this a few times. So at least, so I got in my buy, came down 1, 2, 3, didn't touch back down here, nowhere near, and then shot up. So if you would have gotten a buy right here, just up here, you would have caught a good 70 pips. Just off this move right here. 70 pips. What did I say in the beginning? Most traders, they can't even get 50 pips in a trade. Go look it up. Go on MyFX books. Go look at some top traders, whoever. Go look at their performance. Most of these guys, they're scalpers. They're getting, 10 pips per trade, 11, 15 per trade. Right here, just off this one move, just off of one analysis. Look at this. You placed your low right there. That was your low based off the daily. So market price hit there. It got rejected. How do you know it wasn't going to go through, Steve? Because I would have waited for this time frame. So this is a 15-minute time frame. If I'm looking for my entries, I'm waiting till this candle, the entire 15-minute close. If it would have closed below, then this would be a different story, but it didn't. It traced back up. I wait for the next 15-minute candle, see if it tries to break through again. It didn't, boom, reverse. Once I saw this strong bullish reversal, I would have gotten from my buy. Boom, waited about, you're talking about maybe an hour, but it would have been worth it because you walked away with 70 pips. For those who like to trade big lots, if you would have put a standard on that, that's 700 bucks. 700 bucks in an hour. What would $700 do for you guys? That's, you know, go towards your rent, groceries, you know, an extra vacation, pay off the car note, whatever. But it's $700. I know a lot of, they say, what's the statistics? If the average person in America had an extra 600 bucks in their bank account, they wouldn't file bankruptcy. I've worked for investment firms. I've worked with lawyers where a lot of people who filed bankruptcy and all they needed was like an extra, you know, 500 bucks, 600 bucks. You made your $700 right there. I'm pretty sure for most of you guys, you grew your account. You probably already hit your goals. You're done. You don't have to stay in front of the screen all day. I certainly don't. I don't do it. I don't like it. Make your money and get out. All right? This is a zero-sums game. For every loser, there's a winner. Just like the casino. That's why I'm always comparing the markets to the casino. When you lose money on the table, who absorbs it? Who gets it? It's the exact same thing here. When you're losing money, the person on the other side of the screen that played the right move, they absorb it. Money is never lost. It's just transferred. That's all it is. Your money is not gone. It didn't, you know, disappear. It didn't go in outer space. It's just transferred. And you can bet your bottom dollar it can be transferred right back. But you have to understand, you have to know, and you have to be patient. You have to be patient. Not enough people are patient with the market. They feel like they need to be trading every second, every hour. So some of you guys, it's Sunday. Was it Sunday, Monday? Trading the market. It's July 4th. Holidays. Market is slow. Let me show even Great Britain. Great Britain's not even in the U.S. This was you guys trading on Monday, right here. See that small little candle? Barely a candle right there. That's what you guys were trading. That little thing. This is what people are going crazy for. Instead of spending time with your loved ones, your friends, celebrating independence of a nation, be happy. You got your freedom out. This is what you guys are chasing after. That puny little thing. Pick your battles. Don't just trade to trade. Understand why you are trading. If it's a national holiday, don't be in the market. You want to move when the market is really moving. You want to be in a trade like this strong candle dropping down like this, like this. Little candlesticks like that, that's nothing. You don't need to be trading that. You can honestly trade one pair just for one day. Technically, I can be done for the week. I made, like I said, I made close to $2,000 for the day. I can be done for the week. I know some traders who trade one day a week, make 5, 10 grand or even more, and that's it. They're done. I'll see you next week. No need to trade all day. So just using this simple tool right here, just placing a resistant line up here. And for those who don't know, again, resistance is a level where buyers cannot break through. So buyers came up here, got rejected, came up here again, got rejected, dropped down. Support is below market price, and it's an area where sellers can't break through. Try to drop down here, boom. What did happen? Boom, reversed. So by placing just these lines, most people, they'll place support and resistance all over their charts. Like they'll have a support right here, they'll have a support right here, they'll have a resistance right here. You don't need all that. Get the highest and lowest point. Do that on your daily, skip over, do it on your hour. If you're trading off the hour, do it on the 1 hour. Got my highest and lowest point. Boom. Right here, got my lowest point. Now I got the market in a range. I can just trade. Like, anybody's ever played, seen a ping pong ball just bounce up and down, up and down? You can just literally trade off of these two lines. If I didn't teach you anything else, if we got off this hangout, you can go home right now, turn off your screen, turn off everybody, just do this, just practice this, and see how the market treats you. High and low. I go on to even the 15-minute for those who can't be patient. I got my high and low right here. Boom. I can just trade off of this because eventually market price is going to come back here. Market price is going to come down here. You can literally do that all day. If you didn't learn nothing else, if you walk away and didn't learn nothing else, you can do that all day. So again, what I do is I look for my highs and lows. I go on the daily, get the highest point, get the lowest point. I skip over, go on my 1 hour, get the highest point, get the lowest point. And this line right here is basically off the 15-minute. If you wanted to do that, get the highest and lowest point. You do this every week. I guarantee you, no matter what, the market will always bounce between the support and resistance line. It's either gonna get rejected like it did here and reverse. So how do I know when it's gonna reverse or go through, Steve? Well, buyers got here. As you can see, the size of the candlesticks, they were getting smaller and smaller. Got rejected. I saw this bearish candlestick, reversal. I'm getting in for a sell. Came down, and then look what happened. Boom, clean sell. Same thing down here. Looked like it was gonna pass through, and this is where a lot of people always mess up. They see they'll have their lines in place. They'll see market price cross over it. They'll be like, "Oh, it's dropping, it's dropping." Yeah. And then what happened? Whoop, get that retracement back. Now you're a seller down here, and then market price is moving all the way up here. Now you're in a heavy drawdown. Now you're freaking out. Now you're crying. When's the market gonna turn around? I'm losing money. This was my rent. The market is about being patient. And the crazy part is, you know what's the scary part? These market makers, people who control the bank, they know that. They purposely play on human psychology. They play on your mind. They know that. They know that you're desperate. They know that you want money, you're hungry, you want this and that, all stuff like that. So you're willing to do anything. You're willing to jump the gun every time a big move happens. I don't jump every time a big move happens. How many times a big move happens and you guys see me jump in the chats and be like, yeah, buy, sell. If I miss a move, I miss a move. These moves happen all the time, every single day. Look to my left, everyone. You see all these currencies? You're not missing nothing. There's always some catastrophe going on in the world. If there's one thing that we can bet on, is some type of catastrophe going on in the world that's just going to make the market just shake. That I promise you. You're not missing nothing. The point is to get in clean, solid trades. You are trying to become a consistent, profitable trader. Key thing, consistency. You guys want the big accounts, you want the big profits, you guys want to do the big thing. To get here, you need to manage here your lot sizes, your money management. Stop trying to think you can make $1 million overnight. And most importantly, understanding, having a system, building your account up via pips and percentage, and being disciplined. In any craft, any skill set that you learn, you have to be disciplined. You will never master anything, and that's in any aspect of life. You won't master or become the best if you can't be disciplined. So now I'm gonna show you another trick. Easy, simple stuff, guys. I'm not here to confuse you. The market is as confusing as it already is. There's no need for me to come here and make your life even more confusing, even more difficult. No need for all that. Now, when I zoom out, what do you guys see? What do you guys ever notice something? What is the market always doing? Market moves in like 3 directions, right? Goes on an uptrend, goes on a downtrend, and moves sideways. That's the market all day, every day. Market is just buyers and sellers. Shooting price up, shooting price down. When it's moving sideways, they don't know who's taking control over price yet, buyers or sellers. So right here here, consolidation, just, pushing up, down, down, and then, sellers take control, buyers take control. And this is the market all day, every day. This is not just Forex. This is the S&P 500. This is the Dow Jones. This is future spot, all of it. All day, every day. But if you notice, the market forms patterns. If you haven't realized yet, the market repeats itself a lot. And when I say a lot, I mean a lot. Let me tell you something. These bankers, they're laughing at you. These Wall Street guys, they're laughing at you because you're getting hit with the same move over and over and over and over again. The market moves in three ways: up, down, sideways. I've never seen a market, pop out of the screen, or I've seen legs disappear where you don't see nothing on your screen anymore, anything like that. There's no tricks. In any system, there's always an algorithm in it, set of rules. And within these rules, if you understand it, if you crack the code, you can become profitable. Now, one of the main patterns, and a lot of people, if you guys haven't heard of it, but those who know, if you notice when you zoom out, and what you always come across, and you come across it, if not every single day, every other day, and most importantly, every single week, you come across this, and that is the infamous double top, double bottom, which is also known as M's and W's. Look at your chart. Market is just full of M's and W's. It's an ugly it's an ugly M, but M nonetheless. M's and W's just shooting up and down. Now you're usually waiting for the formation. Now here's one of the tricks. Now write this down. Photograph this. Do whatever it is. Because what I'm about to drop to you guys, this is something a lot of people don't even know, a lot of people don't even utilize. And if performed correctly, you can become a very profitable, rich man or woman. Now, if you guys notice with M's or W's, and you can go on any chart, what is the common denominator with M's and W's? They have double tops, double bottoms. So one right here, so it somewhat be like a double top, and then you got a W at the bottom right here, double bottom. So that's one common denominator. And the second and most important is the V-neck. This V-neck right here. This V-neck right here. If you noticed, in order for a complete and true M or W to form, if after it performs the double top or double bottom, if it truly is an M or W, and market price crosses that V-neck, it needs to complete the full formation of the leg. So you see the extension of this leg, of this M, started right here. You guys see that? What happened next? Came down, sort of came up, and boom. Market price passed down here. Came back up, hit a triple top, but then what happened? Came all the way down here. Completed the formation. Boom. So if you would have had a sell right here, you would have been down for, this is off the 30-minute, so we're talking about a few hours. Draw down. But overall, you would have ended up in profit over, depending when you got out, over 130 pips. So for you guys, if you, put that in perspective, if you would have had a standard on that, basically not $1, it's $10 per pip. That's $1,300 right there. Off of one trade. Same thing. This W. This is the first look. Came down. Dropped. Came up. Did the double bottom perfectly. Curved to the left, but eventually passed that. Got your buy-in. You would have been in a small drawdown, probably like 50, 60 pips. And then what happened? Right here, right here. Over 250 pips. 250 pips on one trade, on one standard lot. That's $2,500. Not trading anything else. Not in 5 different pairs. One of the most annoying things, some of you guys are trading pairs I've never heard of. Some dude inbox me. Can you look at this pair? I'm in Norwegian and Switzerland. I'm like, what? You even know what's going on in either of those countries? Why are you even trading that? This is off of one pair. Guys, again, I know traders who literally, they're successful. They could be making so much money. They trade only once a week. I'll show you another example. Just to show you how, guys. This is serious. Let's find another, and you can find this on any chart, any place where you can find a legitimate M or W. You will size. Boom. Perfect. This is USD JPY. There we go. Got my highest point right here. Boom. Go to my 1 hour. Highest point there. 15. There we go. All right. So where is that M showing that perfect example of? Was that on a 4 hour? That was 30 minute. What time frame was that on? All right, I'll find another M. Actually, that's a bad M. It's a small M right here. Past this V-neck, came down. It was a good one. Where'd it go? Disappeared on me. All right. Let me find new chef. Let's see if there's one here. That's a very choppy M. When you start getting better as a trader, you'll be able to spot them out a little bit more. All right, this is an M. This is a perfect example. This is an extension of the leg. Came up, came down, V-neck, came back up, and then boom. Once it crosses this V-neck, it has to complete the formation. So right here, it passes that V-neck. Right here, has to complete the formation. Has to complete the formation easily. And this is off the smaller time frame, 30 minutes. You would have caught an easy 25 pips. I'll take that. I'll take 25 pips. Easy, simple. If you let the market set it up and you see it, take it. It's there all day. And the market does this every single week. There's not a week that goes by that the market doesn't do it. This is off the 4 hour. Crosses here, came down. Boom. Same thing. You got over 70 pips. Actually, 90 pips. 90, 80 pips right there. Like I said, the average trader doesn't even get 50, close to 50. Guaranteed money. Every single time. Always needs to complete the formation. Boom, same thing. Got the small M right here. Did the exact same thing. Boom, extension. We got about 40, 50 pips. As long as you let the market set it up, it will always be there. This isn't everything, guys. This is not only in Forex. I'm gonna show you. This is also in. Let's show this, guys, to you, just to prove my point. You can do this anywhere. This is Bitcoin, or matter of fact, perfect example. Let me get gold up. This is commodities. This is commodities. This is not currency. This is commodity. Some of you guys are already trading gold. More W. This is right here. Boom. Cross that neckline. Came down. Finished the complete extension of the leg. Right there. You got over your 100 pips. And for those who've ever traded gold, you know gold moves heavy and strong. So if you would have gotten this, crazy. 100. This is commodities. Right here. The market does this and sets it up every single time. Every single time. You'll always find it. Doesn't matter what you trade. You can even do this on stocks, futures, options, anything. So this is one of the tricks that I use, that I'm showing you guys, that you can utilize. So when it comes to M's and W's, write this down, screenshot it. Whenever the market passes that price point, that neckline, the neckline, make sure the neckline is there. And also remember, whatever time frame you're trading off of, stick to that time frame. You can't trade off the 15-minute and then expect results off the 1 minute. It doesn't work like that. Right here, perfect example of an M. Set up the neckline, came back up, somewhat double top, came down, line, firmly placed. I place any sell here. Boom. I know it has to complete the first extension of the leg. So I'm going to grab at least 100 pips on this. And the higher the time frame, the better. More pips you're going to get. Another thing, if it doesn't come back and hit your trade, perfect. It's a risk-free trade. No stress. You're good to go. You don't have to be bothered. It didn't stop. One of the key things that I do is I'll go to new order. I'll put a sell stop. So let's say, for example, I was trading this and I got a sell stop right here. So we're talking 53391. If the market price doesn't hit here, that price 53391 or 505, I don't lose nothing. It's no stress to me. My order didn't get activated. Oh well. I don't have to look at my chart like, oh, I'm in negative, I'm losing right now, I'm down, I'm not making money. No stress. My order didn't get activated. If it does get activated, great. I know eventually over time I'm going to make some money. And for those who don't know how to set orders, once again, you have four different types of orders. You have a buy limit, sell limit, buy stop, sell stop. Buy limit is where you place below market price. So if the market's on a downtrend, you place that order there, it'll pick it up and then reverse and go on an uptrend. A sell limit is the exact opposite of a buy limit. So market price is on an uptrend, hit your sell limit, reverse, and then go on a downtrend. Buy stop and sell stops are continuations. So if the market is on an uptrend, buyers are pushing price up, it'll pick up your buy stop and then continue going up. A sell stop is the exact opposite of a buy stop. The market is on a downtrend. So in this example, if I was waiting for this M to finish formulating. So once the formation is done, once it hits below that V-neck price point, boom, I'm in the money. I have a sell stop here. I know it's going to get activated. It's going to eventually hit my target. I just got to let it ride. And that's it. Is there any questions so far? Anybody got any concerns? Are you guys lost on anything at all? I'm opening up the floor. Hello, anybody? Matt, Lance, Cherish?
I'm good, dude. Thanks for showing me that.
Yes, definitely. So this is oh, we do got a question. Hold on one moment. The V-neck closes, Cherish. I hope I pronounced your name right. All right. So once the V-neck is formed, guys, you want to place it below that. So sometimes there's a wick there, sometimes there isn't. So that's why I said below the V-neck. And then let me show you an example also on the W. I was looking mostly at M's. Let me find a W. Actually, we got it on GJ. It should be forming. That's why, if you look at the 1 hour, we got a double bottom forming. That's why, if you notice my post this morning, I even placed the arrow. Don't get in until price passes here, which is this V-neck. So once price passes 131 around 600, you can get in for your buys, and guess what? You can ride it. This is the full extension of this leg. So we can ride this potentially all the way up to here. See how that works? See how just off this neat trick? This is over 400 pips, guys. I could possibly see it going up to 137, but for a fact, easily is getting up to 134. Definitely. That's over 200 pips. So for you guys who got a big account and can withstand it, that's over $2,000. I already have my buy stops already above that range, as you can see here. So once it goes, boom. And when you place your stop loss, you want to place it below the top of the double bottom or top. So this is the low, the lowest part of the first double bottom. My stop loss is around this range. For you guys with smaller accounts, you always want to do it below the previous couple candlesticks. So if, let's say you got in a buy right here, my stop loss, for example, on this one is like around here. Boom. Or I'll place it down here. So I'm risking 60 bucks, but I'm possibly gaining. I'm looking to gain 130 bucks. You see how that works? Risk to reward. Some of you guys have it backwards. You're risking like 100 bucks to gain 20 bucks. Needs to be the opposite. All right. Any more questions? Any more concerns? I just wanted to do this quick video, training video, help you guys out. If you have anybody on your team can utilize this, I'll drop this. This will be a video just for you guys. Incorporate this, practice marking up your charts. You can inbox me, let me know if you did it right, and you'll see it. Just sit back and watch how the market just bounces off those support and resistance or breaks through. They're perfect guidelines. And then later on, I'll probably shoot some more videos over the weekend. I'm going to go over market structures and channels. So I'm going to show you, once I show you guys how channels work, you're really going to like that. And along with understanding M's and W's better, how you can compound using proper risk. And guys, eventually, like I said, if you're looking to become a profitable, consistent day trader, you will get there. You will get there. This is how you do it. But you have to take this serious. You have to practice on and hone in on your skills. Like any skill set, you can't just, treat it like some little side hobby. Take it serious, put it to work, and I promise you, you'll get the results that you want. And before you know it, if you've lost any type of money, you will make it back in no time. Trust me, it'll be easy. It'll be like, wow, this is amazing. Well, if nobody else has any questions, concerns, I'm about to, close this hangout out. I appreciate you guys getting on this. This is recorded. I'll drop it in the Black Ink group page and also on the Facebook page if anybody wants to recap and look it over. Next video, I'll go over more stuff, Fibonacci's, like I said, channels, mostly channels. How to basically, kind of like what I did with the support and resistance, how I put the market in a range so you know how high market price can shoot up, go down. Same thing with channels. Incorporate that, and I'm telling you, you guys are going to be on your way. All right? So I appreciate you guys for getting on this call with me. Thank you very much. I hope you learned a lot. I hope you took away some great information. And go out there and let's kill the market.